The Toronto real estate market stats are out, and as always, we're going to keep it simple. I'm going to cut through all the noise. We're going to look at the relevant data to give you insight so that you understand where we've been, where we are right now, and where we're likely headed based on trends and seasonality. If you like this type of content, please like and subscribe to the channel. My name is Vas, and I'm a real estate broker right here in the city of Toronto, where I help investors and families navigate our complicated and somewhat volatile real estate market. So as always, the first thing I want to start with is pricing. How are we doing with pricing as a whole in the GTA? And remember, because this is median pricing across all of the greater Toronto area, obviously certain pockets are not going to be performing like this. In fact, some pockets are still performing very well depending on where you are. Some pockets in York region, some parts of Toronto. If you have specific questions about your area, just click the link below and you can reach out to me directly and I can talk to you about your specific area. But let's talk about the market in general and what's happening. So as you will see right here, from January or December of 2022, prices went up roughly 16.5%. So basically May we peaked, and this happened because we had very little in the way of new inventory. We were at record lows in terms of new inventory. And then as inventory started coming up and we started going into the summer months, and then we had additional rate hikes, as you can see the massive drop off in pricing. So from May until the end of July, we've had 2 consecutive months of massive drop offs in price where we lost roughly 6% of appreciation. So we're right back down to 10% appreciation since December of 2022, whereas we were at 16.5 in May. So we're almost at seasonal norms. Now, the question is whether or not this price appreciation is going to stay here, if it's going to continue dropping further into the fall market. So as of right now, it's likely going to continue going down into August, especially as we have more inventory coming, but we'll get into that in a little bit. The big question is whether or not it's going to come back up in the fall, which seasonally it does. This is the big question mark, and we don't know. But as of right now, everything is pointing to lower prices going into the fall market. Now, seasonal listings and sales are probably one of the most indicative charts I like looking at, because it's really showing me the divergence in terms of market sentiment and buyer behavior. So the top graph right here is showing us the new listing median. So effectively, seasonally, this is what's happening. New listings and then 13 or 14,000, but it goes down until we kind of hit about 11 to 12,000 listings in August, which is the lowest part in the summer, and then it goes right back up in the fall as we enter the fall market. Here's what's been happening. We've been trending much lower than seasonal as per this graph right here. And then in June, we kind of started getting into seasonal trends. And as you can see right now, we dropped, and we're actually right at seasonal trends when it comes to new listings coming on the market. So we're no longer short new listing. What's interesting, however, throughout this entire period for the last 7 months, we've been absorbing. So this green line right here is basically the sales. I call it the absorption rate. So we've been absorbing, for the most part, most listings that have been coming on the market have been selling, although we're actually absorbing less than trend. But what's happening here is this divergence you'll see. So the green line is showing me I'm supposed to be absorbing roughly 9,000 to 8,500 listings in June and July respectively. And as you'll see right here, we're actually absorbing much less. Despite new listings being seasonal, we're absorbing roughly 20% less. So that means inventory is likely to start piling up into the coming months. And the last chart I'll take a look at is median active listings versus actual active listings. And the reason this is important is because we want to know at any point in time how many actual active listings out there. Some people are, kicking the tires or testing the waters. They'll list, but they're not really motivated to sell. They just want to see if they can get the price they want. So in this case, the key thing here is not necessarily that we have actually less active listings than we should at this point in time. So for example, we're supposed to have 20 to 19 to 17,000 active listings during the summer, whereas we're at 14,000 and 15,000. What's key here is the actual trend. So we had a lot less active listings during the spring market. We know that, but into the summer, we should be trending down, and we're actually trending up. So it's going to be interesting to see whether or not active listings are going to grow much more going into the fall market, because we're not selling or we're not absorbing as many as we typically do, because the less we absorb, the more inventory that piles on, and then the more active listings we end up having at any one point in time. Now, I do want to point out that there is a lot of difference between detached and condos depending on where you are. So obviously these graphs are just the market at large. But again, like I mentioned earlier on in the video, it really depends what you're looking to buy or sell in this market. So again, if you have specific questions, just reach out to me directly. I can help you with exactly what you're looking to do. But at large, this is what's happening. I hope you found this helpful, and I'll see you in the next one.